Our next speaker is Mr. James Zhan, Senior Director of Investment and Enterprise at UNCTAD. Welcome.
Distinguished guests, ladies and gentlemen, good morning. It is really a great pleasure for me and for UNCTAD to be here with the investment promotion community. We have been with you all the time, but after this pandemic, it's the first time that we meet in person. So it's so warm to see all of you. For today's speech, my topic is global FDI outlook and the implications for investment promotion in the new era. I have three key messages I wish to convey. First is that global FDI experienced a strong recovery in 2021, but the prospect is turning gloomy in 2022. Second, challenges are daunting, but opportunities are plenty. The third is that we need new strategies in the new era of global economy for investment promotion. Let me quickly start with the first point, global FDI outlook. Here, as you are aware, the global FDI recovered sharply last year after it nosedived to the lowest level in 2020. FDI increased by 63%. It was a V-shaped recovery. And such a recovery was broad-based in almost all regions. However, the extent and the degree of recovery varies between regions. There are three major drivers for FDI recovery in 2021. First, it's driven by by M&A booms. And M&A were up by 43% in 2021. That was driven by corporate restructuring led by advanced countries. Second is project finance. It was basically infrastructure finance oriented type of investment that increased by 63%, that boosted by the stimulus package in major countries. The third driver is the reinvested earnings, and that was due to the fact that the replenishment of the capital stock by major multinationals after the disruption of the global supply chain, driven by strong aggregated demand. So these are the three major drivers for the V-shaped recovery in 2021. Prospects is turning gloomy. Here, I have to highlight it, the three sets of indicators or determinants that would define the global FDI prospects for this year and possibly the first half of 2023. First is the impact of multidimensional multiple crises. This I wish to summarize as 3 Fs and 2 Hs. Food, fuel, and finance crises that we are experiencing, plus the health crisis, which is still continuing, and humanitarian crisis in some parts of the world, Eastern Europe, as well as large part of Africa, as you have witnessed. And the second indicators for the prospects relate to the macroeconomic factors, which I characterized as 3 highs and 3 lows. The high interest rates, the high inflation, and also the high level of debt. And the three lows relate to the low level of GDP growth we are going to have, low growth rate of trade, and low growth rate of gross fixed capital formation, which is the basis for foreign direct investment. And a part of this FDI is part of that. So these are the three highs and the three lows will impact on global FDI prospects. And the third indicator is the micro ones. UNCTAD has done a survey of 5,000 largest multinationals' profit forecasts, which shows a broad-based downward revision of corporate earnings across all sectors except for raw materials, primary inputs industries. So all these, the combination of the three sectors, three sets of indicators pointed to the downward trends. So we already started witnessing the kind of downward trajectory of global FDI flows. For example, for the first half of this year, we have already witnessed kind of decline of greenfield project numbers that was declined by 21%. And with regard to project financing deals, which is part of important cross-border investment flows, that was decreased by 4%. And bearing in mind, for the first quarter, the war only happened in the second half of February. So we'll see the trends to continue. There could be three scenarios. The best one is the global FDI for 2022 flatten out. The worst scenario is that it's nosedive towards the level of 2020, which was very low, as you have witnessed. This looks a very pessimistic picture, but I just wish to highlight some opportunities, and opportunities are plenty, as I said. Three aspects, again, I wish to emphasize. First, sustainability-driven factors. That is, sustainable finance has been booming and increased significantly. That provides the basis for global FDI and for investment promotion agencies to target at. Just give you some numbers. According to our numbers, in the World Investment Report this year, sustainability-themed finance, I'm not talking about the numbers of this ESG due diligence related, I'm talking about funds and bonds designated to investing in sustainable development sectors. And such funds and bonds altogether reached $5.2 trillion last year, with the increase of 62% on top of 83% of increase in 2020. That consists of $2.7 trillion of equity funds and $1.5 trillion of green bonds, plus close to $500 billion of US dollars of social bonds, and the rest is the mixed sustainability finance. $5.2 trillion US dollars looking for pipeline bankable projects in your country. This is tremendous, but for the time being, they are domiciled in advanced countries, focusing mainly on renewables. There's still great potential. Just to take the equity funds, for example, the open-ended equity funds at global market is huge, and the current sustainability-themed equity funds count only 4% of the global total. Green bonds counts only less than 2% of the global bonds market. There's still great potential, and it's great mind and reservoir for us, investment promotion agencies, to tap into. This is the first part I wish to emphasize. And then I would say that we need to target at green and blue economies. And that's the great potential to work with the development strategies your countries are formulating, embedding investment promotion strategies into the sustainable development strategies of your countries, and embedding sustainable development strategies into investment promotion strategies. The double embedding we need to get into. And there's also great potential for infrastructure, which the full kind of still the continued stimulus package that we know that stimulus package is kind of for investment is lagging behind the kind of the trends. So those stimulus packages will still having some impact on actual investment on the ground, particularly in infrastructure areas. That creates opportunities for investors and for investment promotion. And third is the health, agribusiness, for food security, energy. These are the key sectors. Because of the crisis, government are now boosting investment, and that provides the opportunity to leverage with private sector. That's the third area for investment promotion agencies to target. The second broader aspect is the global value chain restructuring. That is resilience-driven, geopolitical rivalry-driven, but that creates the new regional hubs, that creates new sub-regional clusters that will create, through the investment diversification, nearshoring, reshoring, friendshoring, whichever it is, that diversification creates opportunities. The third set of opportunities relate to technology advancement. That relates to the replication through the 3D printing is coming up in a big way. And secondly, the service offshoring, particularly high value added, has continued to increase along the global value chain. The third is the servitization and servicification of manufacturing. All these create great opportunities for investment promotion agencies to look into, to targeting at. Now, this calls for a new strategy in a new era of investment. The new era is characterized by the growing VUCA, we call it volatility, uncertainty, complexity, and ambiguity. It's growing, that creates the challenges, but sustainability imperative will drive the investment to the sustainable development sectors, create new opportunities. Get ready with your pipeline projects, restructure your investment incentives because of the global corporate income tax reforms. It's coming, that will impact on the overwhelming majority of your investment promotion schemes, your incentive schemes, which is part of industrial policies. You need to redo that. I do not have the time to elaborate on that. Please read our World Investment Report, Chapter 3, that elaborate on the ways and the means to deal with global minimum corporate tax reforms, restructure your incentives schemes. And then to mainstream sustainable development in your investment promotion, I mentioned a double embedding. So just to paraphrase the president of WAIPA that deeply just mentioned a moment ago, I would see that investment promotion agencies need to shift your voice from the voice of investors to the voice of prosperity for all. Thank you very much.